Hello from Mountain Markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the week number 14. Uh, before, as always, before starting the next week, let's review what happened previous week. Last week, more than everything on the economic calendar, we had PMI numbers and US inflation data. On the PMI front, excluding the UK and United States, manufacturing PMI in other countries increased, service sector a little bit eased, but in the UK and in United States, PMI numbers for manufacturing sector slightly fell, and for service sector and continued to increase. However, generally in the UK, which we had so many other data, the UK economic data, they were better. They were slightly better than expectations, but all of them mostly they were lower. They printed the lower numbers compared with the previous months. Generally, the data confirms that the UK economy is still under pressure and challenging, continuing with having a challenging days. In United States, we had consumer, personal income and expect spendings numbers. CPI, PCE increased by 0.3% as it was expected, but core PCE with 0.4% monthly increase and 2.8% annual increase, they bet the expectations as it was, they printed the numbers digits higher than previous months, confirming that inflation in the United States still is sticky, and central bank and government will have more difficulties to lower this inflation. In addition, we had a 0.8% personal income increase, which means that the people, they have more income and it can increase the demands for the next months, and confirms that the inflation is still can continue being sticky there, especially considering that trade war is still continuing and going to be even more tough days. We're going to have more tough days, and that can support the higher prices. Uh, for previous week, the talks, everything was about the trade talk in the economic in the world of economy, which for the week ahead also, Mr. Trump called the April 2nd as the Freedom Day for United States, which we know that the too many tariffs, they're going to start from April 2 and 2 on other economies, especially the China. They are treating that they're going to have they're going to answer with the same or even higher numbers as the tariffs to come the same problems right now we have with the Canada, but Mexican and European seems like they're trying to find a way and solve their problems with the Trump administration. But Canada and China, they're going against them, and they're gonna put another tariffs against the U.S. tariffs. So generally, generally the economic condition on the tariff stuff, and this the tariff trade, the tariff wars showing that we're going to have more tough days and more challenging days in a world economy. That can be really negative for economic, to overall economic outlook. We know that recently too many of this economic institute, they lowered their economic growth for global economic growth for 2025. Anyway, as mentioned, as I started the next week, the focus on the on the macroeconomy will be on tariffs and how the different countries they're going to answer that, and how the central bank speakers they're going to speak about that. Out of these tensions, we're not on the geopolitical tensions. Conditions in Ukraine is somehow seems like more optimistic, with the U.S. and Russian agrees on some points to get closer to the peace talks and actually the peace agreements. On the other hand, in the Middle East, Israel continuing attack on Hamas and Hezbollah, and also U.S. Attacking the Houthis, which they say, I mean, it says that Houthis, which they are supporting by Islamic Republic in Iran, and that can increase the tensions in the Middle East. So what would you have to wait and see what's going to happen? Especially there are some talks about that, some whispers actually about the U.S. and Iranian the talks agreements about the nuclear stuff and other, I mean, the challenges that they have between each other. But generally, we have to wait and see what's going to happen there. But out of this geopolitical and the political tensions and a trade war, we have a tough week as well in the economic calendar. In economic calendar, as we started from the US, let's continue with the US. In the US, the main focus will be on manufacturing numbers, which again, we are expecting to see the slightly lower digits in the manufacturing, on a PMI number, sorry, say we are expecting to see slightly lower digits in the manufacturing sector and slightly higher in the service sector. On the labor markets, on Tuesday, we're going to have the GLTs where we're expecting to see slightly lower, sorry, we're going to have a slightly lower opening jobs in February with 7,680,000 lower than 7,740. That can continue the trend lower and says that the US labor market is still again continuing to get cooler. There is another very important digit that we're expecting for that is manufacturing, this factory orders. While the market is expecting to see the 0.5% factory orders in February, lower than 1.7% in January, but still, I do think that that can be validated with more, with the higher digits as because we know that you know that with the tariffs there are more more factories and I mean the sellers they gotta order the products in the UK in the United States, so that's why the factory orders can be better than expected and beat this 0.5% expectation. But as we were continuing on the labor market, US labor market will have the very interesting Friday. While we expect to see the unemployment rate to increase to 4.2%, above 4.1% in February, which it was 4% in January. In February, it increased to 4.1%, and now we expect to see 4.2%. The new created jobs should be around 128,000, much lower than 151,000 in the previous month. Generally, in a long, I mean, in the midterm, we expect to see this newly created job to fall further under the 100,000. Under 100,000, we know that the recent years it was the average it was about 200,000 newly created job per month, but it's expected to fall under 100,000 newly created jobs and show that the U.S. labor market is getting cooler. These numbers should be support the idea of probably 3 rate cuts and not 2 rate cuts, but still, especially considering that this trade wars can affect much harder the U.S. economy and generally the global economy. So that's why the central banks now they're talking about the more supportive policies. So we have to continue following and watching the Federal Reserve speakers during the week and see what they are thinking about the further monetary policies and interest rates. Generally, these data they are not supportive nor for the stock market and nor for the US dollar index. Out of the United States, we have a PMI numbers or PMI numbers from China, starting from the China. Let's start with the Japan. The Japan, because it's more than PMI numbers. In Japan, we're gonna have a very busy week with PMI numbers in one hand, householding, industrial production, Tonkin, I mean large. What was the retail sales numbers, and generally the numbers that we are expecting to see, we are expecting to see to have too many economic data from the Japan, and most of them excluding the household spending, excluding household spending, we expect to see the most of this economic data to print much better numbers compared with the previous months, showing that the Japanese economy is going to continue further with inflation higher than the BOG's target. We can expect that these numbers support the idea of increasing the interest rates in its next meetings. In China, we're gonna have the PMI numbers, and we expect to see the manufacturing PMIs to increase about 50, to increase further about 50 from 50.2 to 50.5, while the service sector also should show slightly increase about the 50 expansions area. That can continue for with Tuesday's stocks in manufacturing and non-manufacturing numbers, and we expect again on stocks in manufacturing also to see slightly increase and improvement. Out of that, in Australia, we're going to have the interest rate decision by RBA. Reserve Bank of Australia will have interest rate meeting and monetary policy, interest rates decision and monetary policy meeting. We expect to see for the last time to RBA to hold the rate at 4.1%, but in its next meeting, 25 basis point rate cut is very likely, as we expect to see tough days in global economic improvements actually. So in Eurozone, we're going to have the inflation numbers, and we expect to see the inflation numbers to show slightly stabilized number around 2.3 and 2.6%. The inflation for the core inflation and headline inflation, we expect to see that the inflation generally is under control in Eurozone, and we are not going to see more, for now, we are not going to see more concerns about inflation, which support the idea of rate cut in the next meeting, its next meeting, which is going to be the middle of April as well. We're gonna have the PMI numbers as well from Eurozone, and these Eurozone PMI numbers also can confirm the slight increasement in manufacturing sector, but slightly pressure on the service sector. If we go further and check on the charts to see how these data can react, how these symbols and the assets can react to this data, let's start with the US dollar index. Dollar index, after inflation numbers in the previous week slightly increased, could hold its gains, generally the weekly gains, but it didn't close lower. But generally right now, what we can see in the chart is that after weekly gain that we had this week, in the week ahead, we can expect slightly pressure on the US dollar index, but the slight movement with the slight pressure as the trade war can increase the demand on one hand, and the weaker economic data, which can increase the idea of more rate cut, can put the pressure. So we have different factors, which some of them they are putting the pressure on the US dollar index, some of them they are supportive for dollar index. So generally, the combination of these numbers and these digits means that the US dollar index can continue the slight movement with the slightly downtrend tendency. This reaction in the stock, this reaction in the US dollar means that we can have continuing pressure on the stock markets, especially with the trade tensions and a trade war that is going to be happen more radically in the coming weeks. So we are not positive about the trade war. If you remember previous week in a weekly outlook, we talked that this recovery can continue till 5,800 and down from there. And if we see the recovery under, if we see the numbers can return under again lower, this downtrend can continue further, which happened. Our expectations happen, and we expect still this downtrend to continue, especially with current concern on the stock markets. These concern on the economic growth on the stock market wouldn't be supportive for oil market, but still the oil market can get the pressure. So 67 and $70, something between these digits can be what we are expecting to see for the next week as the global economic growth slowing. The expectations. All these data means that we will have more demand for safe haven, especially for the gold, and gold can continue its uptrend towards 3,100. This is what we're expecting. But on the cryptocurrency market, this downtrend in the Bitcoin downtrend can continue, and we can expect the same reaction in the cryptocurrency market as in the stock markets. That was generally what's happening in the market previous week and what we're expecting to see in the week ahead. If you had any other question, don't forget to write down in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye.